Oh man, this is a great question. You are very, very smart. I love this kind of question. I mean, how do you pre-qualify for any credit card easily? Let's talk about that. Stick around till the end of today's conversation because I'm going to break it down for you. I'll spill all the beans, okay? And you're going to love today's conversation. I guarantee you some Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous if you ever ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, we want to talk about how to pre-qualify for any credit card easily. Before we get into the nitty-gritty, let's first define the most important concept. What is a pre-qualified offer? So a pre-qualified offer is basically how a credit card issuer lets you know that you have met their initial criteria for approval before you actually apply for a credit card, right? So the keywords here are you met their initial criteria. Okay, so you can check for pre-qualified offers on many issuers' websites. You can go on Capital One, you can go on Navy Fed, you can go on PenFed, you can go on Chase, whatever, okay? And sometimes you can even receive in the mail what they call pre-screened credit card offers, okay? So that you so the bottom line is when you have a pre-screened credit card offer or a pre-qualification here, you basically have a soft pull. In other words, your ass is not getting a hard pull, okay? So your credit is preserved. Your credit is protected. In other words, you're not going to lose 10 points. You're not losing 5 points. You are good to go. You are chilling. And I basically advise everyone. I mean, everyone. I don't care if you are 800 or 750 or 350, whatever. You need to apply for a pre-qualification credit card offer, okay? Because you have nothing to lose. Nothing to lose, boss. Nothing to lose. Okay, so that's the first thing. Now, there is a difference between pre-qualification and pre-approval. Okay, the thing is that you have to understand that pre-qualification means that, pre-qualification usually refers to a less formal screening that looks at your basic credit history and other personal information. Pre-approval results from a formal pre-screening on the issuer side. In other words, if somebody asks you what is the difference between pre-qualification and pre-approval comes on top. Pre-approval is stricter. Pre-approval is more stringent, okay? So but in today's conversation, we are speaking about pre-qualification, okay? And there are 3 ways to see if you pre-qualify for a credit card. You have pre-screen offers if you have the mail, regular mail, okay? You can check to see if you're pre-qualified online. Yeah, you can do that. Or you can go directly to the issuer. You can just, if you are a PenFed member or Navy Fed member, or you are a Chase, you have an account with Chase, you have an account with Amex, they actually send you periodically, they send you links, pre-qualification links. Now, we are still talking about how to pre-qualify for any credit card easily, right? So I just explained to you what pre-qualification means. Now, you need to zero in on the card you want to pre-qualify for. If your goal is to pre-qualify for any credit card easily, you can't just be walking around and apply and pre-qualify for any credit cards. No. There are gazillions of credit cards in the whole world, boss, okay? You only have 24 hours in a day. Aren't you working? Hello? You're working, right? So if you're working, I want you to zero in on the credit card that you want, okay? And remember, you need to identify which type of credit card you need. It's not about, when we talk about credit card, when we talk about credit in general, it is a game. You need to be specific. There are rules of the game, and you have rights and obligations, right? So there are 3 general types of credit cards. You have cards that help you improve your credit when your credit is limited or damaged. Okay. You have cards that save you money on interest. You're talking about low interest APR. Okay. Low APR rather. And you have cards that earn rewards. So the best card for you is one with features designed to meet your specific needs. Okay. Paul, I'm talking to you. Okay, Michelle, I'm talking to you. Ruben, I'm talking to you. What are your specific needs? Talk to me about that. What? You want to save money. Okay. What about you, Paul? You want to earn rewards. Okay. So that's pretty good. So if you want to pre-qualify for any credit card easily, you need to know what kind of a card you should be after, right? 3 general types. Cards that help you improve your credit when it's limited or damaged. Cards that save you money on interest. Cards that earn you rewards, okay? Now, if you want to build or rebuild credit, you can go for a student or a secure credit cards, for example. This works fantastically. Now the limits are lower though. When we talk about those secure credit cards or student credit cards, you're looking at limits in the 3 digits, like 300 or 400, and sometimes for 4 digits, like 1,000 maximum. If you want to save on interest, so you want to go for low interest credit cards, right? You want to go for zero APR, or you want to go for a balanced transfer card. So you want to seek pre-qualification on those type of cards. Very important. Here, the limits go a little higher because the card assumes that you have established credit, okay? And if you want to earn rewards, you can go for a rewards credit card, a travel credit card, or a cashback credit card. So those are things you need to think about. So the bottom line is what? Boss, I'm talking to you. The bottom line is you want to narrow your choices by asking the right questions, okay? Are you looking for a low interest credit card, a 0% interest, a 0% credit card, a balance transfer credit card? Are you looking for a rewards credit card, a travel credit card, a cashback credit card? Talk to me about what you need. Hello, I'm talking to you. You're talking to me. You got an answer here. Don't you try to be mute to go mute on me. Don't be shy. I want you to answer me. What are you looking for? The third thing I want you to think about, right? So when we talk about applying for, you want to pre-qualify for any credit card easily. And that's the key word, easily. It has to be easy peasy, lemon squeezy. Squeezy. You hear that? Squeezy. You want to understand the requirements of the credit cards you want to pre-qualify for. The requirements, okay? First of all, if you are a sole proprietorship, if you're a solo credit card applicant, you must be 21 years or older, right? This is basic. You must have a verifiable income source. Oh yeah, you got to have a job. Now, I don't care if you don't need to have a 9 to 5. People think about, the funny thing is people always, what was that? Well, of course, seasonal job applies if you have a full-time job, if you have a part-time job. Oh yeah. A part-time job applies. You know why? Because when we talk about credit card, we are speaking about liquidity. You got to have, when we talk about income source, we talk about cash, right? You need to have the cash to repay whatever balance you charge, whatever expenses you charge on the card. And it doesn't matter as long as you have a legit job. If you have a legit job, the issuer will consider you, okay? And you need a physical address. Okay, as a card applicant, you need a physical address. You need to have a job, a legit job, a full-time, a part-time. If you have a paid internship, that works also. You just gotta generate income. That's what it is. And the requirements, you need to understand the requirements of the card you are trying to zero in on. Okay, you need to have your a social security number. That's just basic. Okay, remember that the credit requirements will vary by issuer and card. Some cards will want you to have a 600. 700, 800, whatever. Depends on the cards, depends on the sort of target audience they are actually going after. Okay, just make sure you don't have too many recent new accounts. This is really important. This will damage your chances of being approved or even being pre-qualified. So if you want to pre-qualify easily for any credit cards, you want to reduce the number of recent accounts that you open. Okay, and try to maintain good brand relationships, especially with banks and credit unions, because essentially, if you really think about it, they are the ones who actually issue credit cards, right? Now you have new players new players. You have Upgrade, and you have some kind of fintechs they're trying to play, but they're still small. They're very, very small. But the bulk of the players right now is banks and the credit unions. So you want to maintain a good relationship with those credit card issuers, okay? And one thing I want to say also is that you want to contact the issuer before. If you want to apply, let's say you just passed the pre-qualification, they give you a positive answer, and now you are interested in applying for real. Do it on the phone or do it at a branch. Don't try to do it online. I want to talk to you now about the issuer. In case you just joined us, I'm just talking to you today about how to pre-qualify for any credit card easily, okay? And so we talk about, you want to focus on the card itself. You want to understand what kind of card you're looking for. You want to have a clear understanding. You want to have a clear idea of the requirements of the card, right? You want to actually identify the issuer that best meets your needs. And this is quintessential. This phase constitute, in my view, again, based on our research and based on my own experience and the experience of our team, this constitutes the fulcrum. This is the cornerstone of a good strategy, the issuer. Okay, and when we talk about issuers, there are three types. I just said it. You have a trifecta, right? With banks, big national banks being the majority here. With banks, you have also credit unions. And last but not the least, you have online lenders, aka fintechs. They're trying to really play a little bit here. They're just like they're newbies. They're new kids on the block. Whatever. But you want to choose the right issuer. And when we talk about choosing the right issuer, you got to pay attention to their annual fees. What are they charging for late payment? What are they charging for balance transfers? What are they charging for foreign transactions? Okay, fees are important because you're not going around just like because lovey-dovey. You just love Amex and you love Chase or you love Navy Fed because you just love the brand name. They don't care about your name. They don't care about your ass. You shouldn't care about their ass too. But you want to care about the fees they're charging you. You want to care about the customer service. Hello, customer service, fees, APRs, credit limits. Those are important elements. Okay. Bottom line is if you want to motivate, I mean, that's not the right word to motivate. If you want to have a good relationship with a credit card issuer, please keep your balances low. Keep your credit card balances low with the issuer, but also with other issuers. Okay, this is important because we kind of go back to what we talked about in terms of credit utilization. So your CUR, your credit utilization ratio, is important because that accounts for 30% of your FICO score. Okay, when you really think about it, and your payment history accounts for what? 35%. And which is the next thing I want to talk to you about. You want to pay on time, all the time. Okay, I don't care if you're having a hard time. If you pay the minimum balance, okay, stay in the game, stay in the credit game, boss. I want you to stay in the game. Don't you get out. I want your ass to stay in the game, and you stay in the game by making payments all the time. You want to make payment on time all the time. Ideally, you want to pay the full balance. But what if stuff happens? You can't make the full payment. That's fine. Make the minimum payment. Let's talk about your FICO score. If you want to easily pre-qualify for any credit card, any credit card, you want to pay attention to your FICO score. Okay. This is a quintessential metric that will follow you till death. You heard it right, till death. Okay, and the thing here is that if you want to be pre-qualification pays attention to your credit score because they're not doing a hard pull on you, right? They're doing a soft pull, but the soft pull part of it, they will pick your credit score based on your social security number. Okay, this will not affect your credit history, but they still pay attention to your credit score to see if you are maybe the kind of clients they're looking for. Okay, and so you want to actually improve your credit score, and it all starts by having a clear idea of where you stand. Where are you right now on the spectrum? Are you on the 300? Where are you on the 300 to 850 spectrum? Talk to me about that. Don't you give me an approximation. Like I think I'm in the 700s, or I'm in the 800s, or I'm in the 600s. How old are you? Do you give me an approximation when I ask your age? Do you tell me, I'm in my 40s, I'm in my 30s? No, you know your age. So listen, from today on, I want you to know your credit score the same way you know your age. Okay, don't you let anybody tell you otherwise, okay? Because your credit score is gonna follow you till death. I want to emphasize that. So you want to check your credit report. You have an opportunity to do this once a year on a website called annualcreditreport.com, where you can request a free copy of your credit reports and you can review it. And I'm talking about request a copy of credit reports from TransUnion, Experian, Equifax, you name it. Okay, they'll give it to you. Congress has mandated this. It has to be free once a year. If you don't want to do this once a year, you can sign up for a free credit provider service such as Credit Karma. You have NerdWallet, you have WalletHub, you have CreditWise, you have gazillions. Credit card issuers even allow you to check your credit score for free anyway. Okay, so you want to improve your credit with more products. You want to diversify your credit mix. Okay, you want to make payments on time, all the time. You want to actually have how do you call it? You want to have fewer inquiries on your credit report. Okay, this is important. So bottom line is you want to have a lower credit utilization ratio. Okay, bottom line is credit card usage has a great impact on your FICO score. Okay, more so than a loan, because a loan you just have to pay once a month. But a credit card, you're using this thing every single day. Sometimes you use it several times in a day. So it is more accurate in terms of it is how do you call it? It is a more accurate reflection of your financial responsibility. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Studio Kiwi Show. We are still having a fascinating conversation, really fascinating conversation about how to pre-qualify for any credit card easily, okay? And the thing is that, what's that? What? I can't hear you. You want to speak up? Oh, yeah. This is exactly what I'm going to talk about, the debt counts. The count of debts you have. So if you want to pre-qualify for any credit card easily, you want to maintain a lower number of debts. And I'm talking about liabilities. I'm not talking about the quantity of the amount of debt you have. I'm speaking about the actual number, the finite number. How many debts you have? Talk to me. Do you even have an idea of how many debts you have? How many? 5, 9, 6, 0. Oh, lucky you. What are you doing here? And you shouldn't be here in the first place. 12. Okay. Well, the funny thing is, some people have no idea of how many debts, how many loans and credit cards and lines of credit they have to pay every month. You know why? Because they have automated everything. Everything is automated. They don't actually check. They just have a savings account or checking account. They have direct deposit into that account, and they have all the loan payments and all the credit card payments that come out of that account. This is a fantastic setup, though, if you can afford it, okay? But the thing is, if you want to easily pre-qualify for any credit card, you want to reduce your current debt count with a specific card issuer you want to apply with. So, for instance, if you want to pre-qualify for a Chase credit card, you want to reduce your current debt count with Chase. Okay, do the same for your debt count in general. In other words, all debts that you have with the Chase, with Navy Fed, with the PenFed and whatnot, you want to actually reduce that. And while doing so, you want to reduce also your DTI. I mentioned this before. Your debt to income ratio plays a quintessential role, plays a pivotal role when making sure that you are in a position where you are financially responsible. DTI stands for debt to income ratio. It is basically a fraction that is a reflection of your financial responsibility, okay? Your level of debt relative to your income. You also want to work on your CUR, your credit utilization ratio. I just spoke about that, which is really important also. The lower, the better. DTI and CUR works in tandem. They work hand in hand, and it's really important to keep them low. The lower, the better. 30%, 25%, in some cases 35%, it's fine. So big decision time, boss. Grandpa, grandma, dad, mom, I'm speaking to you. I want your ass to give me a clear answer. Big decision time. Big decision time. What is your DTI? What is your CUR? What is your debt count? Do you have a clear idea of how many debts you are paying every month? Do you have a clear idea of how many credit cards you currently have, or how many mortgages? I mean, you only have one mortgage or two mortgages, but how many line of credit, how many HELOC do you currently have? Give me a clear answer here. Last but not the least, I want to talk to you about your income. So the whole thing is, if you want to pre-qualify for any credit card easily, you got to work on your income, okay? And the good thing is, you need to update your income on whatever credit card issuer you currently have checking accounts or savings account with, or even just regular credit cards. I mean, if you take a bank like WebBank, they have a lot of credit cards. You may not have a checking account with them or a savings account with them, but you have a credit cards with them. So if you have a credit card with them, you want to update your income. You know why? When you update your income, something fantastic happens. Something wonderful happens. What happens is that there is an algorithm that automatically crawls the data of all applicants, of all, I would say, cardholders. And if the algorithm realizes that your income has gone up, or that your income has been updated, and that your income relative to, because when they initially approved you, they approved you based on an income that let's say you set at 30 grand. But if you change your income to 45 grand, what will happen is that you'll start having a lot of pre-qualification offers, because they realize, hey, this person is banking right now. We better really get more credit cards offers to them. Okay, and that's why you want to automatically, systematically update your income. So anytime you have a raise at work, you have a bonus, you have something positive, monetarily speaking, happening in your life, you want to update your credit card information, okay? Your income information. And just make sure, though, never lie, okay? You want to because if the card issuer wants to verify your income or want to verify source of employment, all that kind of stuff, if they ask questions and if you lie, you'll be in a bad situation. So you don't want to do that, okay? And there are many ways you can actually increase your income from your regular 9 to 5. You can consider thinking, let's say, having a side gig, starting a side gig, working for Uber, driving for Walmart Gold Local, for Amazon Flex. You can actually be a tutor. I mean, there's a lot of stuff you can do. You can work online, from the comfort of your home. The whole thing is you want to generate that extra paper, that extra revenue, to make sure that you are in a good position. Okay, think about also investments. This is a great opportunity. Also, investments are kind of cool, right? So money. At the end of the day, it's all about money. Your income, your investments, your side gigs should generate enough revenue, enough income, so that the algorithm, the credit card issuer's algorithm, will recognize that, hey, listen, this person is banking, and they will send you a credit card pre-qualification. Thank you so much for your attention. I really appreciate it. In today's conversation, I'm just talking to you about how to easily pre-qualify for any credit card, okay? I give you an overview about the concept of pre-qualification. I spoke about the card you should look for, the requirements you should go after, the issuer, the FICO score, the debt counts, and last but not the least, your income. Thank you so much for your attention. I really appreciate it. I'll see you next time. Until then, remember, stay marvelous.